Hello everyone, and welcome back to Explain the Charts, your go-to channel for detailed stock analysis. Today is October 13th, 2025, and we are taking a deep dive into Amazon, ticker symbol Amazon. The stock has seen some significant volatility recently, closing last week with a sharp drop, so we'll dissect the news and the charts to see what might be next. First, let's talk about the news and the fundamental picture shaping investor sentiment. Amazon recently concluded its Prime Big Deal Days event, which unofficially kicks off the holiday shopping season. While this is generally a positive catalyst, some analysts are forecasting a more challenging retail environment due to economic concerns, projecting slower online sales growth this year compared to last. On a more bullish note, there's a lot of excitement around Amazon Web Services, or AWS. Analysts at Baird are highlighting Amazon's strategic shift from a general-purpose cloud provider to an offense strategy focusing on bespoke AI services. This move is seen as crucial for AWS to better compete with rivals like Microsoft Azure and could be a significant long-term growth driver. In fact, that same Baird analyst has set a price target of $244 for the stock, suggesting more than 10% upside from recent levels. However, it's also noted that Amazon has been one of the biggest laggards among the Magnificent Seven tech stocks in 2025, which can be seen as both a bearish sign of underperformance or a bullish sign of having room to catch up. Now, let's turn our attention to the chart to see how this news is reflected in the price action. Looking at the full daily chart for Amazon, we can see a very eventful year. The stock put in a 52-week high of $242.52 back on February 4th before a significant correction down to a low of $161.38 in early April. Since that April low, the stock has been in a general uptrend, but with considerable volatility. The price has been making a series of higher lows, which is constructive for the bulls. However, we need to address the most recent price action, specifically this large red candle from Friday, October 10th. On that day, the stock dropped nearly 5%, closing at $216.37 after hitting a low of $216. What's particularly concerning for the bulls is the volume on this drop. It was over 72 million shares, far exceeding the recent daily averages. High volume on a downward move like this indicates strong conviction from sellers and suggests there could be more downside to come. This drop has established a new critical short-term support level right at that $216 low. On the upside, the area around $228 to $230, which was recently tested, now acts as a key resistance zone. A major level of resistance sits at the 52-week high of $242.52. Let's zoom in on the last month of trading to get a clearer picture of this recent weakness. Here on the daily chart from September 10th onwards, we can see the stock was trading in a range, mostly between $228 and $235. It repeatedly failed to break out above the $235 area, showing a clear ceiling of resistance. Then, in late September, the price started to break down, losing the support level around $228. This culminated in last Friday's sharp sell-off, which sliced through the next support level around $220. This pattern of failing at resistance and then breaking support is technically bearish in the short term. Now, let's switch to the hourly chart to examine the price action in the week leading up to the major drop. This hourly data covers the last week of September. We can see here how the price was trying to hold the $228 level on September 22nd. However, it failed to gain any upward momentum and then experienced a sharp breakdown on September 23rd. The price fell from around $228 all the way down below $222 on significant volume, as shown by these larger volume bars during the decline. Over the next few days, it consolidated in a lower range before eventually breaking down even further in October. This hourly view shows that the selling pressure we saw last week was building for some time. To get the most detailed view of last week's crash, let's look at the 15-minute chart, focusing on October 8th through the 10th. On October 8th and 9th, the stock was actually in a nice short-term uptrend, climbing from $222 to test the $228 resistance level. Everything looked fine for the bulls heading into Friday's session. However, on October 10th, things changed dramatically. After opening, the price hovered for about an hour and a half before a massive wave of selling hit around 1500 hours Universal Time Coordinated. You can see this huge red candle here, where the price plummeted from over $227 down to $223 in just 15 minutes on enormous volume. This was the turning point for the day. From there, the selling was relentless, with only minor bounces that were quickly sold off. The price cascaded downwards, breaking one intraday support level after another. It finally bottomed out at $216 right before the close, ending the day with extremely bearish momentum. This intraday chart paints a picture of capitulation and institutional selling. So, let's go back to the daily chart and put it all together. What are the key takeaways and what should we be looking for? First, let's recap the critical price levels. Immediate support is at the recent low of $216. If that level breaks, we could see a move down to the psychologically important $200 level. To the upside, immediate resistance is now at the former support level of $220. Above that, the $228 to $230 zone is the next major hurdle for the bulls to overcome. So, what's our unbiased prediction? Given the intense selling pressure and high-volume breakdown on Friday, the short-term path of least resistance appears to be lower. I would say there is a 65% chance we see a test or break of the $216 support this week. If $216 breaks and holds below, the bearish case for a move towards $200 is reinforced. For a bullish reversal, we need to see the price establish a base above $216 and, more importantly, reclaim the $220 level with conviction. A move back above $220 would suggest Friday's drop was a flush-out, and I would give that a 35% probability in the immediate short term. Long-term, the bull case rests on the fundamental story, particularly the growth in the high-margin AWS and AI businesses. Look for price consolidation above $216 as the first sign of stabilization. Keep an eye on the broader market sentiment as well, as a market-wide bounce would certainly help lift Amazon. And of course, upcoming earnings will be the next major catalyst that could dramatically shift the narrative. Please remember, this analysis is for informational and educational purposes only and is not financial advice. Trading involves risk, and you should always conduct your own research and consult with a financial professional before making any investment decisions. Thank you for joining me today on Explain the Charts.